All right. Thanks for joining us, Mike. We are now live, and we beat Rick onto the call for once, so that's always impressive. How are you doing today?
I'm good. Yeah, hanging out.
Good. Well, thanks for agreeing to come on.
Junk room.
Sorry?
I said I'm in a junk room, as you can see.
Well, whatever works, as long as the Wi-Fi is better than what Rick's going to have calling in from a road trip.
Yeah, right.
And we'll be fine.
All
right. But yeah, thanks for coming on. Do you want to, while we're waiting for Rick to get going, what have you been up to this week? What have you been working on?
You know what? I had a couple of meetings with some different folks in the mortgage space about their businesses, small business folks that are looking to either take a growth step forward or getting started. And we're looking for some guidance on, what their offering was, how it fit in the market, any suggested changes on, presentation and the kind of 4 Ps of marketing. So that's kind of cool. It's nice to have folks that, value judgment. I saw a post earlier this week on LinkedIn from someone in some industry, I don't remember what it was, talking about people reaching out to ask for guidance, and she kind of looked at them as parasites or something, like very negative. Like, if you want to talk to me, pay me. And I was kind of like, I don't know. I mean, I think you never do yourself harm by talking to people and building relationships and sharing ideas. It's not like any of us have, the trade secret to the nuclear bomb, right? That we gotta keep secret. Yeah. So anyway, how about you?
Yeah, that's always interesting. I've a hard time with that mentality too. With signing an NDA for every single conversation you ever have with anyone gets to be a little frustrating. But yeah, for me, it's been, I guess, a pretty typical week. I'm just been working on onboarding a couple of new partners. NewZip launched a new partnership with a credit union in Texas, University Federal Credit Union, affiliated with the University of Texas out there in Austin.
Right.
So that's a really cool one. That's been fun. Help a lot of first-time home buyers. There's Rick.
Do you feel like?
Hey, Mike.
Hey, how you doing?
I'm doing well, man. Thanks for joining. Sorry that I was a few minutes late. I was trying to navigate the StreamYard link in my iPhone app, so I apologize.
That's all right. What's on your hat?
Oh, it's an airport, actually. It's a local airport up in Northampton, Massachusetts. It's kind of the call sign for the airport where my 12-year-old daughter flies.
Oh,
she's
nice.
She's 9 hours into her flying instruction, and it's amazing because she'll have her pilot's license before she has her driver's license. So it's
crazy.
Unbelievable. Yeah, she's nuts. Like,
is there anybody in your family that did that, or what was the inspiration?
No, it's a good question. My father was retired pilot, reconnaissance pilot in the Air Force, and then my brother, my sister went to the Air Force Academy, and my brother, one of my brothers was an F-16, like a jet mechanic.
Wow. Right.
So, a lot of military sort of roots in my family's. Oh yeah, no, for sure.
That's cool. That's great. Yeah, I'm gonna pass on that, but it's great for you. No, I'm just kidding.
Dude, it's nuts, man. I mean, it's amazing to see. And this was just as applicable. This kind of inspired me about my LOs and my employees. Because I'm like, God, here's this little girl who was 11 when she started, who didn't she doesn't know her limitations, right? So all it took was a little bit of courage for her to be like, yeah, I'll try that.
Yeah.
And then all of a sudden, like, these boundaries that otherwise would have been like obvious, like, of course an 11-year-old can't fly a plane. Like, that's just a ridiculous, absurd sort of suggestion. But those obvious kind of assertions weren't so obvious. She just sort of stepped into the role and started doing it. And it's one of those things where, I look at my employees and I say to myself, here's somebody who's like 30 years old. Can somebody Can someone like as young as Brock like have an impact on the industry? Well, of course not. He's not been around that as long as
Right.
he should, but he is, right? And I think sometimes people go in with these pre notions saying like, no, I'm only 32 years old. I couldn't possibly have an impact on this business, and it becomes such a self-limiting barrier that we impose on ourselves.
Right.
So whether you're a loan officer at 30 years old trying to get some momentum in a challenging market, or you're 50 years old and you've been through some incredible times and you're saying to yourself, gosh, I don't know if I have it in me. That's just such a self-imposed limitation, you
Yeah.
know?
She'll carry that with her for the rest of her life. I mean, that lack of barrier, that I can't do that, I'm scared to do that. Like that's awesome. She got rid of that. It's gone, and she'll
Yeah,
just
no,
tackle
look,
stuff forever.
I hope so, man. I mean, but I have, a lot of kids, and it's one of those things where you see certain strengths from each child sort of emerge,
Right.
and that's definitely one for her, man. She's definitely a youngest kid where she just always almost expects to do everything her older siblings can do that her older siblings could never do at her age, but she just expects it. Like she's like, oh well, if
Right.
they can do it, I can do it. So
That's great.
it's an
You got to
amazing
get her on here to
analogy.
talk. You got to get her on here to talk about her lack of fear.
Dude, I'd love to do that yeah, that's a great idea.
Yeah.
We should have a kid episode, Brock.
I'd
Yeah.
love to have my daughter on. Absolutely.
Children of mortgage professionals and what
Yeah.
their takeaways are.
Yeah. Yeah. Yeah.
But
Well, I have to say, I taught my daughter at a very young age. If you asked her what she wanted to do, I have to say, I apologize in advance, but she said, I don't know, but definitely not mortgage. So,
well, that was me.
yeah,
Trust me, that was me when I was younger. So tell her to keep saying that because she's going to talk
yeah,
herself right into it.
yeah. So, Brock, before you came on, Brock, you were talking about signing up a credit union. I had a question for both of you guys, which is, do you, Rick, from a lender perspective and Brock from a vendor perspective, do you see any change in lender mentality after this down cycle where they're open to ancillary products and services to add value that they might not have been before, like
Oh, sure.
NewZip or any other, you know?
I mean, my view, the answer is yes. I mean, I'm not sure. NewsZip might be a little different because it is so innovative, and it kind of challenges lenders to kind of, I think a little differently around compensation and how they hang on to opportunities with realtors. But I think that there's such a desperate grasp for new business, that when you get an innovative solution like NewsZip, it's kind of like shit. Nothing else is working. So, or even more so, hey, we want to provide more arrows in the quiver for our loan officers to retain as much business as they can. So
Yeah,
I'll try NewsZip, or I'll try this lead source, or I'll try this new technology, assuming technology, assuming reasonable costs or
yeah,
deployment or that kind of thing.
yeah,
Yeah, that's relatively, I mean, easy for me to be biased, of course, about music, but in general, I think it's a really hard time to add. I think it's a really hard time to sell like heavier long-term like software solutions. Changing LOSs,
right,
POSs. There are great new companies in both of those spaces. There's a lot of new CRM companies that have innovative takes on the market. But I think it's pretty hard to get people to change like their tech stack right now. But
yeah,
just because that's expensive and takes many years, if ever, to get ROI on it. At NewsZip, our strategy has been like, let's bring down every barrier possible. If you want to
right,
launch in one channel, sometimes we can launch partners within. This partner this week is a really large credit union in Texas, and from the time we signed the contract to got the first deal from them was like a week
oh
because
wow,
we just kept it really simple.
yeah,
A lot of the integration and technical work is going to follow some early success, and we can kind of do a pilot version of the launch. So
right,
I've tried to be, and our team in general has tried to be really thoughtful about not giving any reason that lenders wouldn't want to work with us. Bring down the cost barriers, bring down the launch
right,
barriers, bring down the sales barriers. And we've kept our contracts super simple, where we're not asking for all your business. We're just asking you to test us, things like that. So yeah.
And it, in this market with what's coming up in August, there can't really have ever been a better time for a lender to get tied together with the ability to, work with real estate agents for people that come and don't have one,
Let me ask you a question, and maybe you guys already covered this. But before we dive too deep here, like, I'd like to know a little bit more about you. You're the mystery man to us, and a bit of the incredible supporter to what we're doing, and we've loved your comments and your engagement on LinkedIn. Like, dude, you got to tell us, and all those who follow up and watch this program, like, who Mike Cush is. Is it Cush or Cush?
Yeah.
It's very exciting, believe me.
Is it Cush or Cush?
Cush, yeah, Irish, yep.
Cush.
100% Irish, yeah.
Dude, I love that. So tell us about you, man.
Well, I'm just like you guys. Well, actually, I'm not like Brock. I'm more like you, because I've been in the mortgage business since Brock was in like 3rd grade, probably. But I've been in the mortgage business 25 years. I started as a call center loan officer at PHH in Southern New Jersey. At a time when they had just gotten purchased by what was called Sendent back then, which was like the first kind of agglomeration of all these different products and services. Guy bought, what's today Anywhere.
Hey, Brock, you there? Did he freeze?
Yeah, he's not. They bought Anywhere, which is the Century 21 ERA Coldwell Banker. They bought us. They bought Senate Mobility, which is Cardis, which is a relocation company. So they were piecing together all these different pieces and creating at least stock market value. So it was kind of a cool time. The industry was changing a lot, and the kind of the internet was starting and real estate search engines. Anyway, I worked there for like 17 years in a variety of different roles.
Oh wow!
PHH was pretty unique in the.
Mike, let me ask you, but did PHH buy New Penn? Is that the same?
No.
Okay, so New Penn got absorbed.
Well, New Penn got bought. New Penn was started by Jerry Schiano, who owns Spring EQ. New Penn is bought by New Res, which is part of Rhythm Real Estate. So now Rhythm Real Estate owns New Res, and they're involved in real estate from little to big. I mean, they're big corporate commercial real estate player and all that stuff. And then Jerry went on to start Spring EQ, and he since has sold that. So I'm sure in his back lab somewhere he's already started his his next thing, whatever that might be, because that's his that's his 3rd company he started. He did Wilmington Finance, and then
I remember Wilmington.
Yep. So anyway, I worked at PHH. Like I said, we were kind of a unique business model. We were like the 4th largest lender in the country at one point, but nobody ever heard of us. Because when we did loans, we did them for Merrill Lynch, Morgan Stanley, UBS, Goldman Sachs. When I left PHH, I had all those folks as clients: Comerica, KeyBank, Banco Popular, TIA Craft, Century 21 ERA, Coldwell Banker. So we were like a white label lender, and closed loans. Actually closed the loans. We closed the loans, but we did it in the other people's names, which is kind of I don't even know if that would fly today. But anyway, when I left PHH, I had all of the inside sales group, which we were doing about $35 billion a year. So that was probably the biggest mortgage single site call center in the country at the time when I left there. I also had the portfolio processing group and a customer success group and a sales training group. I ended up going to New Penn. When I got recruited to go to New Penn, there was a guy there who was the COO who was looking to start. He saw United Wholesale Mortgage, which at that point was doing like $4 or $5 billion a year, and he thought that was kind of the future of wholesale. Getting rid of the outside AEs and kind of
And what year was this?
2015.
Oh, got it.
So
okay,
so they were
makes
small.
sense.
They were just starting to grow.
Yeah, it's still good size, but it's still.
Yeah. I mean, they were, back then, right? This is kind of pre-wholesale growth.
Yeah.
Even if they were doing 4 or 5 billion, they were the number 2 or 3 wholesale lender because there was nobody doing what they and Quicken are doing today. But at that point, Jerry kind of was prepping the company to sell it to New Res and start Spring EQ. So he was not interested in taking on like a 5-year project of any sort. So I ended up leaving there, went to work for kind of a unique, weird player in the mortgage market, which is the AFL-CIO. So the AFL-CIO is kind of like the United Nations of labor unions in America.
Absolutely.
Yeah, so most of the labor unions in the country belong to the AFL-CIO. They own a company called Union Plus, which is basically it's like the AARP for people in unions. So they have all kinds of products and services that affinity partners sell and utilize their name. They have a couple million Capital One credit cards. They're the biggest AT&T affinity provider, and they've always had a mortgage platform, and it's outsourced. And like right now, it's outsourced to Wells Fargo. And I'm going to go into a little bit of detail because it's a cool and unique product and thing that they did. Wells Fargo basically, as the MSA provider, contributes money to a fund every time they do a loan in this platform. And this fund, it's called an ERISA fund. It builds up, and Union Plus uses that if the borrower gets laid off, disabled, or goes on strike to help them make their mortgage payment for up to 6 months. So it's an awesome, unique hook. Most of the time, it's an interest-free loan, so that fund just keeps building and building. But you think about it from a sales perspective, like from a call center sales perspective, most of the business we did was purchase, but we could call the agent and say, if you move this customer, they lose this benefit, and make sure you understand that. And they never touched our customers because they didn't,
it's powerful.
Yeah, we would literally say, if they get disabled in 5 years, if they call us, we're going to remind them to call you to find out who's going to pay their mortgage.
Mike,
so,
Mike, let me ask you a question about that. Yeah. Okay.
Sure.
Well, let me ask you a question about that. Is that money in the coffers? Is it money in the AFL-CIO itself, or?
It was in an ERISA fund. So the vendor would put a per loan contribution into an ERISA fund. And an ERISA fund is it's part of the Employee Retirement Income Security Act. It's basically, the fund has to be for the benefit of certain people, and there's tax rules. It's, it's non-taxable, but you've got to spend a certain amount of the money in benefits. So it's kind of held separately, in its own, regulated fund, almost like a 401k, like a company 401k. We lost Dr. Rick.
Yeah, I think he's on the road, so he might be a little bit in and out. But that's a good question. So was that if the servicing right, like if they actually sell off the servicing rights from Wells, or what was the concern?
Servicing in this relationship, but what we did was broker, so the servicing of course got sold. And if a person made a claim, we just had to track down and make sure that they got that loan through us, even if it was end up being sold. And then the fund pays the servicer directly for the payment. They don't give the money to the borrower; they pay the servicer directly. So, like I said, it was a great hook, and it always drove me to think why our industry is. Now, that's a complicated product, but why our industry doesn't come up with more unique and innovative solutions to try to create, brand awareness or attract customers or whatever the case may be. So anyway, that's kind of a little bit about me. I live outside of Philly in South Jersey, and I always think of myself as kind of a mortgage contrarian. I think a lot of the stuff, from a distance, I think a lot of the stuff the industry does is it's like the ultimate groupthink. This is the way we do it. This is the way we do it. This is the way we do it. And nobody wants to hear or think about other things. And every company does it kind of the same way. And, so I that's kind of the perspective that I come from.
Yeah, cool.
Yeah.
I assume Rick will be back in a minute, but that was helpful. And I know we'd connected a few weeks ago, and we'd gone a little deeper on the union opportunity, union affinity products, things like that. So that is an interesting topic to me, and related to NewsZip as a strategy. So always interesting to discuss.
Yeah. Yeah. And, you know, the weird thing I think about my mortgage experience, not better or worse, just different, is, you know, the high net worth world of mortgages doesn't really merge with the rest of the world of mortgages, right? So
Mhm.
UBS and Morgan Stanley, they're doing loans today for their customers, and they're not really part of the mortgage industry. They're really part of the high net
Yeah.
worth, the wealth management industry. So we don't
Right.
interact with them much. But to be part of that world for, you know, that long, it's definitely a different mortgage world, and you know, it's got you know, a lot of unique products that the firms had that don't really exist in the rest of the marketplace, and
Yeah.
you know, kind of the way they view customers and customer relationships and all that kind of stuff was
Yeah.
definitely unique. I mean, you know, we went years where we almost never did, you know, we didn't do that many conforming loans. You know, we were basically a complete, you know, jumbo house because, you know, because
Jumbo
of the client
plus.
base. Yeah, yeah,
Yeah.
yeah, yeah. Um,
Um,
so, you
cool.
know, and it was like I said, it was interesting because you got to see all these different players come in, and but you know, ultimately it was difficult because we had a lot of clients that, you know, we took years to integrate, and then they got bought and they disappeared. You know, when I first started, Wells Fargo didn't have a mortgage platform; it was us, and
Hmm.
we did their mortgages, and then they got bought by Norwest and they disappeared, and then it was, you know, TD. We were integrating TD Bank, and they merged with another bank. They were gone. Like that. That happened to us a lot, which made it kind of difficult because you put so much in costs into an integration like that for it to just disappear overnight.
Yeah. Hey,
You know?
Mike.
Yeah.
Yeah, yeah,
Oh, I was gonna say, I was for some reason my audio, my video wasn't working for a little bit.
yeah,
Um, what's interesting is right before I left cross country rolled out a product that I thought was very similar to what you were talking about with Wells, where it was a death benefit. We serviced the
yeah.
loan at cross country.
Yeah,
The
I
death
worked with.
benefit for police, fire, and it
Yeah,
was police, fire, and
yeah, yeah,
military. And
yeah,
if you were killed in active duty,
yeah,
we paid off the loan for that prospective spouse or the
yeah,
respective family. But we just took out an insurance policy on every closed loan that in essence got activated at the
yeah,
death
yeah.
of
Hmm.
the the borrower that was affected by it.
That's great. I mean, that's awesome, and that's the kind of. So, just so you know, I spent I took some trips to Cleveland and met with them through the years.
Oh
You
yeah,
know, yeah, yeah, with the union platform, just, you know, talking about some potential options. But that's
cool.
awesome, and that's the kind of thing that, you know, it's a it gets you in a door somewhere. It's different. It provides a benefit to a consumer. It's different, and it gets you in the door. And I don't know why there's not more of it. You know what I mean? Like my question earlier, I was going to ask both you guys, I guess, is, you know, I asked the question earlier, Brock and you, about offering other stuff. What about additional revenue sources? Like, you know, if you think of the traditional buyer's real estate agent, they're the hub for referrals to other parts of the process, right? Well, why doesn't some lender say, well, we want to be the hub, right? We want to refer, we want to sell insurance, and we want to be the ones that refer the real estate agent and everything else. You know, I know it's difficult because you're in that world, so it's kind of hard to step on that world. But do you
Yeah,
guys see any thoughts
it's
or changes
it's
to?
hard, man. It's hard. I ran partnerships for cross country, and let me tell you, getting people's time and attention around and away from the core product of doing mortgages.
Yeah,
I mean, you'd think if you're doing 10,000 transactions a month, um, there's a massive ecosystem of consumers and you're servicing 350,000 consumers a month. You'd think there's a tremendous platform to be able to offer them, you know, landscaping, yard work, contracting, painters, um, you name it, anything pertaining to the homeownership experience. But sometimes, mortgage companies get stuck in this very myopic, um, very just focused view around closing mortgages,
yeah,
which is exactly what butters their bread for the most part.
Yeah.
But at an organization like Cross Country, I presented many opportunities that would generate $1, $2, $3 million a year in revenue, and there was just no appetite for wrestling resources internally to serve those needs. There just
Right.
wasn't. It
Yeah.
was lack of vision in marketing, lack of commitment in legal, lack of support. You know,
Yeah.
so it was, if it didn't have anything to do with driving unit count and unit volume,
Right.
or if it did drive unit count and unit volume, if it took 6 months or 8 months or 12 months or longer to actually to realize, forget it.
Got it. Yeah.
And this is like the
Yeah.
company that could and should do this, right?
Right.
And so if you start, when you go down to American funding organizations, it's just like the smaller you get in that top 20, and then then the production just falls off like a cliff across like everyone else in the industry.
Yeah.
It just diminishes its value that much greater. I still think cross country of all companies could pull it off, but it was maybe a failure in leadership on my part, or a combination of that and lack of time and attention, and maybe just company timing.
Right.
But there was just no appetite to do it. I mean, and I brought some massive players to the table, Target and Wayfair and U-Haul and all kinds of companies that could literally do this whole thing for the consumer, and it was like a ho hum.
Yeah.
$1 million
I
bucks.
honestly, I had a really similar
know?
experience at Rocket, Rick. Jeremy and I both,
Yeah.
honestly. We looked at a ton of those types of, without those same types of companies, whether it's Angie's List or, Home Depot, the ones you mentioned, any of those, where it was the same exact deal almost at Rocket, where there was some appetite but not really enough, and the only
What
things
about
that did get done tended to be like pilots and like the simplest versions. Yeah.
that stuff I understand, but what about, like, I know as a loan officer, every single first-time home buyer I ever spoke to asked me where to get insurance.
Sure.
So
Sure.
that is one where I don't understand, especially
Well,
Rocket.
Well,
Now,
homeowners insurance. Well, Rocket has homeowners insurance partnership to deliver that to its consumers. I know New American Funding rolled out one.
Okay.
I think I think they may have gone with Policy Genius, but and then Cross Country is going to roll out their own. But the problem is there are, it's like cutting in a new product in the workflow.
Yeah.
It's introducing it to the consumer. There's RESPA considerations. So to go through the legal minutia in the technology and the operating and the marketing minutia to deliver this and to offer it and then to capture the consumer's information and to enlist them, it's no small feat. I mean,
understood.
It sounds easy, but boy, I tell you, it's really, really heavy lifting. And I have to give sort of Jeff Quailawag, kind of props, because he came from Rocket, went to New American Funding, and he does a lot of heavy lifting. I mean, he's not the easiest guy to work with, but he's probably one of the smartest guys I've worked with in the industry, because he really gets it in a very three-dimensional kind of way on how to do these, the heavy lifting of these types of partnerships in a very, very complex way.
They've been able to do a lot. Yeah, they've been able to do a lot. Everything from, offering their own real estate arm to cash offer products and another, I don't know how many different entities they have floating around, but it's very similar to what Rocket had, which is not easy to replicate. Rocket have worked on a lot of that for a really long time.
I wonder if there's I don't know anything about New American's tech stack, but I wonder if there's a correlation between being beholden to a third party with everything that you do.
Well, they're on Encompass. They're on Encompass.
New American's on Encompass? Okay.
Yeah, they're on Encompass. Cross Country's on Encompass.
Okay.
And there's probably and New American's a very technically sophisticated company. I would consider Cross Country significantly more technically sophisticated than probably any mortgage lender that I've ever had my hands into or been a part of. But again, technical sophistication for mortgage companies. I mean, Sierra Pacific, where I am now, is a very technically tech-forward company. Sierra Pacific created their own LOS, is building out their own AI tools. They really like to own the tech stack, part of it for just management purposes, but really for cost containment purposes, because it's, it saves us millions of dollars a year in fees to Encompass if we had gone to Ellie Mae. But But even tech forward companies, it's not easy to wrestle resources and to get the prioritization that you think would easily be attained. It's a very complicated Rubik's Cube. You almost have to have the CEO at the very top to say these types of, like, yes, we're a mortgage company, but we're going to focus on all the spokes in the wheel, the mortgage being the hub of the wheel. But there's a lot, like, you almost have to organically just drive the fact that we're going to go after other channels of business to plug into that central hub. But I can think of very few. I mean, I really can't think of any CEOs, because typically CEOs start like Ron did. He was an originator 28 years ago, and they grow up as originators doing only mortgages. That's all they ever do.
Right.
And in Ron's case, he was really good at it, and he created a company that's the best at it, right? From the standpoint of growth and scale and that kind of thing. But it's hard. It takes a really unique leader, and I don't know of too many leaders that really have that kind of vision to do that.
We've also seen some where I think they do too much too fast. I mean, some of these online lenders that Newzip's had a lot of success with.
Better's a good example of that.
Yeah, I mean, I've had a lot of success working with those kind of companies at EasyKnock, my last company, and Newzip. So, like, obviously, like, they're getting some things right, but they're like very early adopters before they build their mortgage operation. And I think that runs into a different set of problems where you don't even have volume, but you have, you go so wide before you have serious volume. But we got a comment from Michael Hughes on a company that he thinks is doing a good job with homeowner insurance partnerships, all at a Turbo. The ones that I have, friends and colleagues at that are selling into lenders for homeowners insurance and other similar products are Matic and Covered Insurance, among a few others. I have former coworkers and friends at both of those spots that I know do a really good job too.
Yeah. Okay. Credible.com is another one that's been partnering. I think they partnered with AFN and a couple of other lenders, but Policy Genius, Credible. Matic, I didn't know Matic did homeowners insurance. Is that what they do? Is on the homeowners insurance side? But I thought it was mainly on the servicing, because I know that Ben has been really smart at coming up with a compliant method to kind of do an auto scan of your servicing portfolio, and then when your homeowners insurance comes up, it'll automatically sort of trigger an alert. It'll shop it for you.
Yeah. That's not the part that I knew about, but I'm sure they do that too. I think they're like heavily tech enabled, where they can plug in a few different places in the process. But I know that they do like the HOI, real-time quotes for lenders, like at the right point in the mortgage process, depending on the product.
Yeah. So, when I think about the mortgage industry, right? The mortgage industry is the number one industry in the world where the volume goes like that, but you have no control over anything that drives your volume, right? It drives industry volume, because the rates go up and the rates go down. You have nothing to do with it. Your product goes on sale tomorrow. You didn't set the price, you didn't set the sale, and you're not prepared for it. Yeah. So what about and when that happens, it totally changes. Like, every time that happens, whoever's the top 10 lenders changes because something, in the market's changed, or something.
You were better positioned for it. Yeah.
Yeah. So, that's another reason that I think about the positioning of a mortgage lender is somebody's got to step up and find a solution so that when that happens.
Oh yeah, dude.
You're
trying to,
right?
you want to normalize the revenue curve, so that way it's not so beholden to these fluctuations through these other third-party partnerships. Trust me, that it's hard when you're really busy. Then the time and attention isn't on these third-party partnerships because you're too busy doing units.
Understood.
When your volume is down, you don't have the money to do it. You have the money or the priority to pursue these third-party partnerships.
That I knew from Merrill Lynch back. So we had Merrill Lynch at PHH, was one of our big clients, and he said to me that securities-based lending is counter-cyclical with interest rates. So he's like, we should talk about taking your salespeople and having them pivot to security-based lending
Yeah.
when your business slows down, because
Mhm.
I don't need, like, we have opposite problems. I don't need all those people when you need them, and vice versa. So, I don't know what other industry
Yeah.
like that is kind of cyclical. I just can't believe that there's not a solution
It's
for some of these
it's just
problems.
it's hard to do that.
Yeah.
Depositories are just most officers are
Cutting pretty bad now, Rick.
commission only LO. No, I was just saying most loan officers are commission only, and when they're commission only, it's very
Yeah.
difficult
I'm
to
talking
get them
call
to
center
pivot to
people.
another
Yeah,
product.
no, I'm talking call center people,
Yeah.
not outside.
Yeah,
people.
I thought Rocket did. I mean, they had 4,000 loan officers. I think when I was there at one point, if not more, in the call centers there in Detroit and Cleveland and I guess Phoenix. But they one of the strategies they had that I thought was pretty good was they spun up like a call center as a service business, Rocket Connections,
Right.
I think it was called.
Yep.
And they would move over 100 at a time, 50 at a time, whatever, loan officers to do campaigns over there when originations were slowing down. And, they'd be licensed loan officers, but then, they'd go work on selling insurance for someone or selling, there was a whole auto business as well. But it was kind of interesting, like the ability to move around hundreds of call center salespeople at a time, depending on like what campaigns made sense right then. I don't think it was perfect, and I'm sure every one of those guys would have rather been selling loans than whatever third party product they were selling. It smoothed out the curve a little bit, which is really hard to do.
Yeah, and it also keeps Rocket's position strong when all of the retail lenders that are just, their value prop is to hire people. Those people tend to scatter, and when business comes back, that's why that's part of the reason why it's different players at the top when the business comes back. But Rocket has done a good job of staying at the top, and as a public company, you can't, we were a publicly traded non-bank lender, and when the CEO has to get on in a downturn, Wall Street just wants to hear you're cutting heads, and it doesn't. Yeah. So anyway, I just think it's a business that's ripe for some change. That's all, because it's,
no, we're, obviously I'm a big believer in that. The last few companies I've worked at and even at Rocket, a lot of what I worked on for the 7 years I was there was kind of this expanding the ecosystem type of plays. So, that's a lot of what we're doing, and we're starting to get a little NewZip ourselves are starting to get more sophisticated about attaching lenders, whether it's our preferred or our lender partners is like preferred services. We now have a moving concierge partnership. We have some options for title partnerships and homeowners insurance partnerships and things like that. But I think the way we're going to play it is if a lender has their own, we'll attach theirs, because
that's great.
Our first goal is making our lender partners, comfortable sharing their business with us. We don't want to take anything away from them. But then there's probably a good half of our lenders, if not more, that don't have these services. And so then that's where we maybe could have our own preferred ecosystem and give people the option to turn them off or on. So that's how we're thinking about it. But there's a lot of other ways to think about it if you're at a lender yourself. Yeah.
No, but that removes a lot of the organizational barriers or even mental barriers to bringing on some new partner, when it's like, oh my gosh, they're going to mess with all this other stuff, and when you can say,
totally,
we're not going to mess with that.
I've done that math before of like, how much title are we going to lose if we partner with this company, if we partner with that company. The equation starts to get a little wonky when you look at what else you're going to lose. The really funny one that I've seen print a ton of revenue is that no one ever thinks of is the home security systems. Those companies pay a ton.
Really?
Yeah, like I've seen a few different companies, Rocket being one, but people get sick of only hearing about Rocket. It's
Yeah,
no more.
hey, listen, they're
Like
innovative.
there's some crazy
Yeah.
partnerships like that loan officers can sell pretty easily, and realtors can sell pretty easily. So not like any of this is like a golden goose or anything, but it's interesting when loan officers have extra bandwidth, is like, what else can we have them work on? What else does the client need, or
What do you
what's
think
working?
what do you think would happen if a company, not a big company, a little company, totally rebranded, and kind of what Rick was talking about before? We do mortgages, we're focused on mortgages. That's all we talk about internally, so we don't have the bandwidth to change this stuff, which I get. What if a company came out and said, we want to be, um, we're a tiny company, we don't have any recognition. We're going to be um, the home buyer partners. We're going to be whatever you want to call it. We're going to not position ourselves as a realtor. We're going to not position ourselves as a lender. We're going to position ourselves as a guide to walk you through the home buying process.
Mm-hmm.
And all this stuff, the realtor and the mortgage and the insurance and the alarm, um, becomes value added things that you do for that person along that path. And you put a lot
Yeah.
more focus on the path and what it is, and the education and preparing people.
Mm-hmm.
Do you think that that kind of model, if you got away from branding ourselves as a lender or
Yeah. Sorry, cut for 1 second, but yeah. No, I really like that theory. That's I've seen certain types of companies try to do that, but they haven't been like really mortgage companies. You know what I mean? They've been
yeah,
more. I've seen. Let me put it this way: I've seen several real estate companies try to do that and then try to add mortgage later.
right,
Think about. I mean, even Zillow is an extreme example, trying to add mortgage after the fact. Our CEO at NewZip, our co-founder, is he was the head of innovation at Keller Williams when they bought Keller Mortgage. So he saw that side of the coin. I've seen most of those go really poorly, where a real estate company builds the whole ecosystem and tries to add mortgage later. Um,
right.
we used to say at Rocket, like, it's easier to start as a mortgage company and add things than it is to start as a real estate company and add things. I don't know if that's true. We were biased,
Right.
um, but even at NewZip, where we partner with all these companies, we see some of the same stuff, where it's like some of the smallest partners are the ones that are trying to attach everything, and then some of the biggest partners only do mortgage, and it seems a little wonky. But I like the idea, and I think from a tech standpoint and a process standpoint, it's getting easier all the time with whether that would be like AI workflows that kick off everything, all the other channels that you're not
Right.
as much
Right.
of an expert in, or whether that's API handoffs to your real estate partner and to your title partner and to your home insurance partner and to your moving partner and whatever else, your Home Depot connection,
Right.
whatever.
Right. Right. Right.
Um, so I think the tech exists to make that pretty easy. I think it's just no one's maybe taken a really big shot at it with a
Yeah.
big budget. Yeah.
I mean, I spent a lot of time in corporate relocation mortgage, right?
Yeah. Hmm.
PHH, Cardis was the biggest relo company in the country.
Oh yeah.
And in relo, it's soup to nuts, right? They're giving you information on the schools. They're helping you get your driver's license in the new city. They're helping you with a house, a mortgage, homeowners insurance, moving, et cetera, et cetera.
Yeah.
And the people look at that as that's a true value add. Like you're taking all this stuff off my plate. So
For
in the
sure.
right circumstances, the customer looks at it as a real positive. You know what I
Yeah.
mean? Because in that space, they demand it.
Hmm.
So that just always led me to believe like there's other people that would like that too. I don't know how much of the market it is, and I know it's not an easy struggle, but that's the fight that I fight.
Yeah, I mean that's almost exactly our thesis, is like, let's give a lot more people the reload type of concierge experience. The
Right,
original
right.
the original name of NewsUp before we rebranded was Relo,
Yeah, right.
REALEUX. Yeah, like
Yeah,
a French sounding,
right, right,
but
right,
it was kind of funny. The theory was like basically like a reload experience for all, was like the
right,
founding thesis for NewsZip like 6 years ago or whenever it was, for 2018,
right,
2019,
right, right.
and kind of have thinned that down a little bit to focus
Yep,
on the mortgage go to market strategy. But
right.
um, that's how we see the world too. I guess I'll put it that way.
Yeah. Okay. All right.
I
Well,
don't know if we're getting Rick back where he's
doesn't seem like it.
being a road warrior. I'm always curious how many days a year that guy's on the road. It's got to be like
Seems like a
200.
lot. Well,
Yeah,
it looked like he had a kid in the back seat, so
he
he's
did.
headed somewhere. Yeah. Oh well.
Cool. Any final thoughts? What are you expecting to come in the rest of the year here? Any predictions?
I think that I've changed my opinion on interest rates, and
Okay.
I think that the Fed has no decisions, and they usually overshoot one way or the other. I'm kind of starting to be convinced that we might see, I was thinking we're not going to see a drop until after the election, but I think that we might see one September.
Yeah.
Just because there's enough lagging job data that's starting to pop its head, and
Yeah.
so
Yeah, it seems like there's been just in the I mean, this is the third week in a row that rates have fallen a little bit.
yeah,
I think that
yeah,
this
yeah,
week maybe a little bit more, but the last 2 weeks really incremental. But still, like rates falling 3 weeks in a row probably hasn't happened since March or earlier.
right.
So yeah, it seems like there's
The market's thinking the same way.
some people seem to agree. So that I'll take it. Yeah, I'm not much of a weatherman for mortgage rates.
Right.
Rick's probably better. But
Well, one thing I learned years ago working at PHH, and I won't name any names, but we're a bunch of mortgage guys, and our clients were the world's largest investment firms. And the chairman of one of those banks asked us in a meeting, "What do you think's going to happen to mortgage rates?" And that just told me, I'm sitting there thinking, "You're the world's largest bond trader." You know what I mean? And if you don't know the answer,
the only thing that affects
yeah,
those is rates.
yeah,
Yeah,
I don't know I don't know the answer because I know about DTI, but I don't know what you know. So my point is nobody knows.
that's
So
pretty funny.
yeah,
Yeah, I agree with you there. The other good sign is there's a little bit more inventory. I don't think it's the inventory anyone wants. I
right.
think it's I think it's well, I mean,
Regional. A lot of
someone
it's
wants it,
regional.
right? But it's
Yeah,
a lot of it's not in the right places. A lot of
right.
it's not starter homes, if those even still exist.
It's
Um,
like unemployment where you've got jobs at this part of the country and people without jobs here, but it doesn't do any good. So like you're seeing
right,
inventory in Florida and Texas
right,
where you had that big push of people from the pandemic. They probably overbuilt or whatever, but
yeah.
it's not doing any good because there's not people there.
Yeah.
So
So some good data, but I'm still a little dubious of whether that good data
yeah,
is really as good as it looks. But
yeah,
let's hope
I
so.
hear you. Yeah,
And yeah, let us know if there's. Appreciate, like Rick said, you being a long time listener and caller in on the comments section on the show. We'll have you
no
back
worries.
on at some point,
All
and
right, cool.
keep in touch.
All right, man. Have a good weekend.
Yeah, thanks for coming on, Mike. I'll
All
talk to
right,
you
see
later.
you.